everybody, what's up? We are back with another stock analysis, and today we will be looking at Enphase Energy. They are a solar company, um, really taken some hits recently, especially in the stock price. But we're going to be looking through their financials, talking about their performance from those regards, going into the earnings a little bit, just to see where the company is at and given my opinion on where I think it's going. So if you're interested, make sure to subscribe, like the video, comment below what other companies I should review, and share this with every single human being you possibly know. Trying to hit 1,000 subscribers by the time I graduate college, which is in about 3 weeks. Will that be possible? Maybe. But yeah, let's get into Enphase Energy. So, just looking at their chart over the past few years, you could see they had an all time high at the end of 2022. And since then, it has been a pretty dramatic fall. And this is kind of happening in the entire solar industry. Another company I cover every once in a while is Solar Edge, and you could see a very similar thing happen to them. Towards the end of 2022, they were seeing a fair bit of stability in their stock price, at least. Obviously, there was a lot of jumping around, but they had a price range that they moved through at the very least. And over the next few years, basically dropping straight down. I would say a lot more dramatically than Enphase has, but even still, it's kind of an industry thing that has just been going on. Another one we could look at is First Solar. Now, First Solar has been seeing a lot more success compared to the other two, and they have actually found support recently, and it looks like they're going to go higher. This is one of my own actual companies that I personally own, so a little bit biased, but we won't be going into them too much. But basically, what I'm trying to say is many solar companies have been suffering. First Solar, not so much, but another major player like Solar Edge is a pretty good example. But yeah, dropping a ton. Throughout the market difficulties that we've been seeing recently, you could see they have continued to fall fairly dramatically. Stock price was right around 100 a share, bouncing somewhere plus or minus 10 to 15 of that for a couple months. And since then, we have dropped a whole lot more. And it does not look great at the moment. They did just release a fairly disappointing earnings report from what I could see. But saying that, let's start getting into some stuff. So, the metrics recap of that recent earnings report, you could see gross margin missed slightly, operating margin again, slight miss. Cash flow from operations were less than half of what was expected, which is pretty rough. Capital expenditures, which are some of the costs associated with the business, again were higher than estimated, and free cash flow was about a third of what was estimated. So across the board, big stinker on the financial side of this. Really does not look great for the company. This is what analysts are saying following that report. So shares were down almost 15%, missing the estimates. Again, like we were saying, guided quarter two right around the midpoint of their revenues that they're expecting. However, FactSet's estimates were a little bit higher, so that guidance is, again, lower than expected. Sentiment was generally negative, fell short of expectations. Downgrades are happening as well. Management guidance, we already talked about that. Efforts are underway to qualify non China cell sources by early 2026, with demand uncertainty factored into guidance. Their new systems are expected to reduce costs significantly. Expected improvement as supply chain adjustments take effect post quarter three. So it seems like they're doing some things to improve things, but again, they're talking about 2026, 8 months from now, quarter three, 6 months from now. I think what people want is more results faster, obviously, but overall, just doesn't really look like the company's going to be delivering on those. There are a ton of analysts commentary here. Usually, we get like three or four, and I'm seeing like 10 or something. But anyway, most of these, I believe, are negative, target lowered, target lowered, target lowered. If you'd like to read through these, feel free to pause as I was just scrolling through them there. But basically, it does not look great, and analysts are agreeing with that. So, saying that, let's get into the hard financials here and just see how they've been performing. So, this is fiscal years. We're not going to look at that first one because I'm looking at overall years. So, sales 2024. You know what? Actually, maybe we will look at it. Let's check out the quarters because 2024 was a very rough year. So Still, yeah, okay. Does not look great. Quarterly sales are down quarter over quarter, and you could see 2 years ago they were making 700 million a quarter plus, and now they're down to the mid 300 millions. Does not look very good. Net income is positive, however, fairly low. Um, which is fine. At least they're profitable. That much can't be said for companies like SolarEdge, which is unprofitable, and very much so. You know what? Not going to look at the comparisons because that'll take too long. But basic shares looks like they're actually reducing them, which, in my opinion, if I was an investor of this company, which I am not, and they were using money to purchase their own equity, I would be very upset. And the reason for that is, like I was saying, sales are dropping, profitability is decreasing, and they are putting money into buying equity, um, which is strange. I don't like that at all. So anyway, looking at the balance sheet, cash is at 1.7 billion. We have about 1.3 in total debt, so not too bad there. Their debt to equity ratio is pretty high from what it seems here. I'll have to look at the ratios just to confirm that, but it does look like it's well over 100%. Total assets are staying relatively stable. Nothing too much to be concerned about here. Again, they do have a lot of cash, which is something that is good. Let's take a look at these cash flows, though, and see what they are putting their money in. So, operating cash flow looks okay. It is lower than it was in the past few years, which isn't great at all. Again, people like growth, which I think everyone will agree with, and we're not really seeing that. Let's see, investing activities. They have been selling off their investments over the past couple quarters, which could be good. Hopefully, we find some kind of increased efficiency or margins from that. So far, the results are saying no, but you never know. And again, looking into this, the past two full years, we're seeing just under $1 billion going into stock repurchases. During that time, their profitability is a quarter, less than a quarter of what it was. Why are they putting money into repurchasing stock? I could not tell you. I don't know why. Um, Free cash flow has decreased 2 consecutive years during that time as well. Does not look great. I am not a fan of the stock repurchases. Usually I am, but in the case where you're losing growth, it's just not the best decision. Now, they could have commitments where they have to repurchase their stock. That could change some narratives here. One thing I will say is there are very clear, consistent gross margin improvements, which we're seeing right here. Operating margin, not seeing the same results. Huge dip in 2024. Same thing with their net margin taking a dive in 2024, which I'm imagining is due to a lot less demand in the solar sector as a whole. SolarEdge was seeing a lot of the same problems, but either way, those kind of decreases are just too much to ignore. Looking at the debt to equity, we're at 160%, which is very high. Not a great position to be in for any company. A company like this, where you would expect high growth in a growing industry or a high potential industry, having it this high still isn't that great. So, saying that with Enphase, I'm going to go ahead. Oh, one other thing I want to look at actually is the comps analysis, which hopefully SolarEdge is included in this just to see um, what we're looking at that. And unfortunately, they're not. So they're different parts of the solar business, it looks like. And actually, they're in the electronic components segment, which is a little strange. But looking at the PEs, they are actually considered undervalued compared to a lot of these companies. Let's look at named competitors and see what shows up here. Um, Possibly some other solar companies. Okay, SolarEdge is included there. Unfortunately, they won't be included in the PE ratios because they are not profitable at the moment. But either way, it is still looking like they are undervalued compared to their competitors. So that is a positive. Does it mean that I would consider them to be an attractive company? No. Just because the results are not leaning that way, I still think there is a lot of work to be done in terms of profitability and consistent earnings growth, which they are just not seeing. A good alternative, which again, I do own this company, but First Solar is one of the few bright spots in the solar industry. So they are still having some struggles that are being addressed, but at the very least, they are considered undervalued compared to their competitors. And they're just actually seeing growth in the solar industry, which other companies cannot say. But again, I am biased. I do own that company. Enphase, I do not. But it just doesn't look great to me. I'm not a fan of it. But yeah, that's all I got. So if you enjoyed, make sure to subscribe, pretty please, and share this video with every single person you possibly know that could be interested. Trying to get to 1,000 subscribers before I graduate, which will that happen? Probably not, but you guys can hopefully assist me with that. And yeah, that's all I got. Thanks for watching, and I'll see everybody in the next video.